Hello everyone, I hope you all fine and doing great. And myself Raja Kumar, I take class for CMA Inter Group 2 paper number 10 Cost and Management Accounting and Financial Management. Okay, today the last class of cash flow statement. I hope I complete all the topics in the cash flow statement. This class will be a little bigger. Don't skip this class. If this class you attend that entire concept of cash flow statement till in this class. Before that four class, this is the basic concept. I can tell the cash flow statement within one or two classes, but what the concept and detailed explanation, each and everything you must be know. Then only you can attend the exam in clarity way. In the few days before I attend the meeting of CMA, seniors meeting. In that there are seniors, they came like 50 plus and 40 plus CMS. Okay, they tell the experience like practice is the most important to the clear the exam in the first or second attempt. If you attempting in the 2, 3, 4 or lot of time you attend the attempts are going now, the first thing, first remark is you have a lack of practice. You must be practice in dedicatedly all and each and every question you must be practice. You never fail. You don't follow 100% of book coverage. You don't follow the 100% of all subjects. Okay, concentrate your favorite subject and then go with your flow and complete as much as possible. If you have before the examination, take some rest to complete the subject. Whenever you want to study, that time you study, and keep thinking practically. Don't mug up the concepts and don't without understanding the concept you know not write the answers. Okay, just understand the concept, why this and where we use this is the professional course. In the practical way, if you have doing the each and every concept, you can use it in a practical way. This is the book they give as a this is the professional course. They model the model of the professional course is that only. So accordingly, if you doing the practical way, this great student, you are the pakka student of CMA. You achieve the lot after the passing the CMA. If you are mug up by heart the concepts and you write in the examination, I tell the first remark for you. If your concept is by hearted, you score high, you have passed in the examination. Definitely you passed. I not tell that you have never passed. You passed in the examination, but one thing, the by heart concept is not favor and help to you in the future after passing the CMA. So understand the each and every concept, why we study and where it is used, and who all the head of the who are what I tell, where are the places it will be used. All things you must be understand in the studying the syllabus. Okay, so understand each and every concept, then only you can have a more interested. Okay, this concept is this much benefit for me, and this concept, oh, this also benefit for me. So each and every concept is important. Every concept is a benefit for you only. That type of setting the pattern and syllabus is there. So accordingly you study that concept each and everything in understand and crystal clear. Okay, this is my class. I will start my class with the motivation. Okay. Okay. In the previous class, we see the operating costing, in for operating activity, investing activity, and financing activity in the cash flow statement. I do some sum also. Just go through in the previous video. Just you not see in my previous videos. You just see in my previous video. Wait, it's not working. Okay, like that. You must be format the cash flow statement. Okay, first you put the net profit, TDR, increase reserve, like that, non-cash expenses and losses, goodwill, and operating profit before working capital changes, and net cash flow from operating activity. Then we find out the net cash flow from operating activity. Investing activity, there is a two-step: inflow and outflow, less the difference of inflow and outflow, net flow from investing activity, and the same as a financing activity also, cash inflow and outflow. And then in investing activity we take a fixed asset, and financing activity we take equity and share capital, and long-term borrowings. Then operating activity, you take all the extraordinary items like tax provisions, tax, dividend, and reserves, and non-cash expenses and losses, and non-cash income and gains. Then what a difference of working capital changes. Is all the three concepts we see in the previous class in the basic way. In the next in the class we go with the flow of starting with the new concepts, and continue with the question and answers and sums we do, and concluded with the very elaborate question. Okay, and then we end the class in the today. The cash flow statement concept is over in the today. So just follow with me, and please understand the concept. If you have a doubt, please contact me at the Telegram at CMA Raja Kumar. If you have a doubt or a comment in the comment box, yeah, I answer that comments. Okay, I hope you all understand. Then go to the new concept. Okay, this is the new concept: provision for taxation. In the cash flow statement, provision for taxation is a one transaction. Okay, what is provision for taxation? What is provision for taxation? Tell me. Provision for taxation. Okay, I hope you all understand the provision for taxation. I tell that tax is paid every year, and every business and organization will pay the tax to the government every year. In the financial head, financial management, the financial CEO, CFO, every person, they know the year end there will be pay some tax to the government. So the person, representative person, take the future steps of like that provisions, take from expenses like that. They know this the expenses we pay in the future period. So we take that amount before the month. It will be reduce the burden of the last period of the tax payment period. Okay, this is the simple concept for provision for taxation. I given in the elaborate. Provision for taxation, what? Expenses occurred for tax, allocate some cash. Expenses occurred for tax. Okay, that allocated some cash, known as a provision for taxation. I hope you understand. Sorry for this. Then we do some, you can understand it. The question they given opening provision for taxation, opening balance 20,000, closing balance 80,000. The provision for taxation. This is the provision for taxation. Tax. Okay, this is the provision for taxation, opening balance and closing balance, tax paid during the year. We find out the how much provision during the year paid, during the year created. We find out the sum. Okay, like that they are asking, and this only they are asking the examination. Provision means what? We know that expenses occurred in the year. Before that, the financial manager understand that these expenses occurred in this year. So according to that, we take some amount, allocate that expenses, that is known as provision. The take for the tax for purpose, that means known as the provision for taxation. This is the simple concept. Okay, we do the sum, you can understand. In the exam also, this small concept play the major role. If you are wrong in the concept, if you have posted in a wrong place, that entire cash flow is wrong. So this small in this class we take the important small concepts and understand the concept in a deep way. You can able to answer the cash flow statement. Okay. Okay, I do the sum. They given. Okay, they given 20,000, 8,000 as a opening and closing. In the previous class, I tell that liability always credit balance. Opening balance is credit side. Assets always debit balance. It will be majorly used in the examination. You putting the workings for the adjustment. Okay. Liabilities, all the liability its opening balance was credit balance. All the asset opening balance we put in debit balance. Okay. In the provision for taxation is a purely liability. We take some amount for the future expenses. It will be paid to that expenses only. So the provision means we allocate that amount for payment, for giving other, like a capital is a liability. This is for not for our business, it for not used for our business. It will expenses that pay to the other, pay to that expenses. So it will be the liability for the business. Okay, the liability always a credit side. The opening balance of the 20,000 will be by balance B by D. Credit side will be a poster. By balance B by D 20,000. Okay. Then to balance C by D 8,000. Then tax paid. In the, again I tell that in the liability, opening is credit side, closing is debit side. If debit and credit of liability, opening, closing, here we put. I ask one question. If liability value increases, we debited, credited? Absolutely, we debited. Liability value increases, we credited. Liability increases, we credited. Liability value decreases, we debited. If tax paid is a reduce of opening balance. Okay, if tax paid is rupees 25,000, it will be reduce the opening balance. Opening balance of the provision I allocated 20,000. During the year I pay that 25,000 taxes to the government. The closing balance is 8,000. Okay, sorry, forgot the closing balance. We pay the 25,000 as a to the government. The opening balance will be reduced to 0. Okay, then it will be reduced to 0. I add with the opening balance or less with the opening balance? Absolutely, I less with the opening balance. Less means debit is a credit is a opening balance, we less means debit it the transaction, they reduce the opening balance. Okay, tax paid to tax paid rupees 25,000. This each concept is very important, so you must be understand what I am telling. Okay, the total of this transaction is this year debit balance is 33,000 and the credit balance not 33,000, 13,000 short is there. What is the 30,000? Why this difference come? Where the difference came? The opening balance of the provision is 20,000. I pay 25,000 um, in the year, and the closing balance I 8,000 I have. How I have 8,000? If I allocate some amount to the provision and this year, that only give the closing balance and payment the taxation. Okay, the cash flow statement clearly find out the exact cash amount where the cash flow in the business and where the cash and goes outside the business. Each and everything will be show in the cash flow statement. So the balance of provision, balance of this 13,000 is provision for taxation 33,000. Okay, this is the concept you must be understand. This is the simple concept. That's it. Provision for taxation concept is over. We directly jump to the sum. Okay. In the sum, you first in the every following question, I take that read the question and understanding it, and after that doing the sum. Okay. Before class, I not read the question because the time is very less. In the class, we read the questions in your understanding, and after that, you also understand how to read the cash flow statement question and how to answer it. Okay. First, in the question, what they given assets and liability for difference opening and closing balance of 2 years. Okay, this is the question they given and give some adjustment also. Okay, we read the question. There is a share capital. Share capital 4,50,000 and 4,50,000. The share capital is same for opening and closing. Okay, there is a no difference of the share capital. It means why the no difference? There is a no issue and no repayment of share cap, redemption of share capital is not there. That the reason only there is a no difference of opening and closing balances there. There is a nothing in happen in the share capital. Second thing, you come to the liability side. Second, general reserve. In the general reserve, opening balance 3 lakh, it will be increases the difference of 10,000, 3 lakh 10,000 it will be increases. That means increasing in reserve. The company takes some reserve to the in the year, take some reserves in the year. Okay, it will be reflected in the operating profit. Add from the net profit. Okay, then next net profit. Net profit, how we find out? Opening and closing different is the net profit. Okay, opening and closing is known as a net profit. Here the net profit is 56,000 and 68,000. Difference is the net profit. 1 minute. I take the calculator. Every sum you do now, here near one calculator is must. Then only you can answer the question easily. It is a practice way also. The examination also you take a calculator. Okay, 56,000 minus 68,000. This 12,000 is a increasing in opening balance is closing balance, increasing in net profit. The 12,000 difference is the net profit of the year. Okay, if previous year 68,000, current year 56,000 means net loss. It will be reduced compared to the previous year and current year, next year. Okay, then this is the opening and closing balance, and then we find out that creditors. In the creditor, current liability, working capital changes, we put the each and every transaction. You must be understand. You see the transaction where it come. Okay, share capital, there is a no differences, so it will not appear in the cash flow statement. We not take the cash share capital. Second thing, general reserve, it will be reflected in operating activity. Profit and loss account, it will be the net profit of the operating activity. In creditor, working capital changes, it will become this is the current liability, increase or decrease. Decrease in current liability. Decrease in current liability means we reduce it. Yes, we reduce it. Then tax provision. Tax provision, we see now the concept. Tax provision, and they given opening and closing provision is there. Opening is 75,000, closing is 10,000. We do the workings and tell that answer. Mortgage loan is there. Before that, previous year not loan is there. To this year only we take some loan. It will be reflected in financial activity. Then fixed asset they given for 4 lakh. In the fixed asset they give the adjustment also. We see in adjustment costing of 10,000. The everyone have mistake in this reading the fixed cost cash flow statement also. In the financial accounting and profit oriented company also, everyone most of the students mistake on that reading in the fixed asset adjustment. Fixed asset costing of rupees 10,000 was sold is 12,000. The profit was included in the profit and loss account. Okay, the costing of 10,000 means that 4 lakh asset have some 10,000 machinery is there. There is a 4 lakh asset means all the machinery, plant, every asset is there. In that particular one machine have 10,000 rupees cost. That 10,000 rupees costing was sold at rupees 12,000. The difference of 10,000 and 12,000 is 2,000. Okay, the 2,000 profit is included in P&L account. This all adjustment we do, we can see in the below. Then doing the sum, I will be put it, and how you derived it, you can see that. Investment activity. Investment activity is increasing. Investment is a fixed asset. It will be come in the investment activity. Increasing in investment activity means inflow of cash. Reduce the decreasing in investment means outflow of cash. We less it. Then stock, current stock and debtor is current asset. The current asset is one is decreases, we add it. One is increases, we less it. And then bank, the bank cash and cash equivalents, we see in the first class. Cash and cash equivalent means cash and bank. Cash and bank, cash in hand and cash at bank, in both are included, and cash equivalent we take as a opening. We start with the we derive the net profit, net cash flow from the all activity, and add with the 1,49,000. It will be comes to the 1,97,000. It will be comes to the 1,97,000. Then only your answer is correct. Okay, we do the sum. I explain, and then they give us the same as a costing of 8,000. We sold us 8,500. We do the sum. You have some idea of this sum. First, we do the workings in the working note. Okay. Okay. I do some workings in the working note. Okay. First, we should do the workings. First working is investment costing of 8,000 and sold it 8,500, and investment opening and closing of investment we see the opening and closing of investment. Opening is 50,000 and closing is 60,000. Okay. Investment account. Asset always debit balance. Opening balance 2. Balance B by D. Rupees 50,000 and 60,000. 50,000 by balance, sorry, C by D 60,000. 50,000 and 60,000. Okay. Then in the adjustment they given investment of rupees investment costing rupees 8,000 and it was sold. Don't take the investment cost, investing costing 8,000. It will be included on either opening class. It will be included either opening or it will be included in the opening openings. So that openings they included the 8,000. It will be sold at 8,500. If the purchase of investment is debit, it will be added to the investment opening investment. If it is sale means it will be credited, it will be reduces by sale 8,500. Then profit was 8,000. This given in the sum, you just directly do that difference of 8,000 minus 8,500. 8,500 was 500 rupees. Okay. The two profit and loss account 500. Then balance difference between how much we see that 68,500 and this side 68,500, but added difference is 50,500. 500 is there. Then 18,500 difference is come. I will say that they give the profit and sales there. In the investment, the logically we think in investment there is a no depreciation. There is no depreciation concept included in the investment. So debit side it will become there is a purchase of investment is there. Definitely is there. Don't think draw more deeply. There is a purchase of investment. This the closing. This difference only we find out. It will be added. This 500 will be added in the operating activity. This purchase of investment will be posted in the investment activity, and sale of also posted in the investment activity. Opening and closing will not be taken. These three difference only we take in the investment activity. This approach only we do the sum. Okay, this approach only follow the cash flow statement. First adjustment we do the workings. Second adjustment we do the workings. That is provision for taxation. Provision for taxation. Okay, this is credit balance. Liability always credit balance. By balance B by D. To balance C by D. How much amount? Provision 75,000 opening, 10,000 closing. Then 9,000 was paid during the year. 75,000, then 10,000 closing. Then to tax paid during the year was 8,000, I think so. Yes, 9,000. 9,000. I rub this. Here it will become 75,000, but here not will come 75,000. 19,000 only is there. The difference of this tax paid. Sorry. This is not tax paid during the year. Tax provision created made during the year. Sorry. This question, some mistake has happened in the. You also correct it. I read it as a tax paid. You also correct this. In the examination also you have some. This correction is there. Tax provision created made during this year. This year some tax provision. They allocate some amount to the taxation for the taxation. Okay, we find out how much tax paid during the year. Okay, there is a two question where they ask, they give tax paid during the year and ask that how much tax provision of the year. They give tax provision of the year and ask that how much tax paid during the year. There is a two question only. They ask the provision for taxation in the examination. You also don't do this mistake in the examination. By provision during the year 9,000, it will be around 84,000. Then to tax paid. This is the balance in figure 74,000. It will be reduced from the operating activity. We see in the operating activity how it will be reduced and how we post in the operating activity sum. This also come in the operating activity. We add it, we less it in the net profit with the net profit in the different steps. We also see that. Then lastly we see that fixed asset. In the fixed asset they also tell that 10,000 costing of the fixed asset, it will sold at 12,000. Here also 2,000 profit is there. The profit of the 2,000 is posted in the debit side of the fixed asset account. The opening fixed asset amount was rupees 4 lakh and 3,20,000. Opening balance of fixed asset always debit balance. Like that you can accordingly understand each and everything and tell that and do the sum. Okay. This clarity must only follow you, follows you also, followed by you also. Fixed assets, rupees, debit side is the opening balance and credit side is the closing balance. To balance B by D is means okay, opening balance we write like that, 4 lakh balance brought down, and C by D means carry forward, like that we do forward. 4 lakh, then by balance carry down 3,20,000. I think it will be right. Then sales, by sales to 12,000. Then profit is 2,000. To profit, how much? I think it will be correct amount. 4 lakh 3,20,000. Okay, 4 lakh 3,20,000. Okay, here decrease in fixed asset. Okay, decrease in fixed asset. The total is 4,02,000 in debit side. The credit side will be reduced as the decreased. The difference will become in the decreased. Decreased side will become, credit side will be decreased. In the fixed asset, there is a logic. It will become fixed asset depreciation is the only reason for decreasing in fixed asset. Okay. What is the difference here? 4 lakh 2,000. Here also 4 lakh 2,000. But if there is a 3 lakh 32,000 difference of it, 70,000. I think so. You also do in the calculator by C by D. Sorry, by depreciation. It will be appear in the operating activity in the add with the net profit. Okay. Okay, that's all. We do all the workings in that. After that, we do the sum. Then only you have a concept clarity in the sum. Before that I do that format of the sum answers for your time saving. Okay, we go with speedily. Operating activity, we find out our net cash flow from operating activity. First is the net profit. Net profit is difference between the opening and closing balance. The difference of 12,000 is there. I tell before. I type the amount. You follow with me. Take the screenshot and pause the I'm reading time. And the question I read that at that time you pause it and note it that question and answer that question. Follow with me in your notebooks. Okay, speedily within 2 minutes I do this answer because I explained in previous classes. So you follow with me. Net profit is 12,000. Okay, then TDR we do. TDR means tax, the dividend and reserves. If there is an increase, any increases in TDR, we do that. Yes, there is an increasing in reserve. I tell that before in the sum. There is a 10,000 is increases. And make sure it is correct. Yes. Then provision for taxation we do now. That rupees 9,000. The provision during the adjustment is there given. Then net profit, this is the total of net profit from the extraordinary item, 19,000. Okay, then add the non-cash items and losses. That is the depreciation. We find out that 70,000. Then less the non-cash items there, if any. No non-cash incomes and gains. There no sorry, there is an income and gain is there. 2,000 profit on sale of fixed asset and 500 profit on sale of investment is there. The total of that sorry, the total of that 2,500 I do it. I write it that invest profit plus fixed asset profit 500 plus 2,000. I do it here 2,500. This is the sum. Okay, like that you do. This will be less it with the. It will become opening operating profit before working capital changes. Sorry, it will be type mistake. Profit before working capital changes. That is 70,000 minus 2,000 is 68,005. Sorry, 68. 68, 17,000, 2,500 means 68. Sorry, 67,500. Okay, 67,500. We add with that. Add the both 19,000 and 19,000. 19,000 plus 67,500 equal to 86,000 plus 12,000. 86,500 plus 12,000. Is that coming in around 98,500? Okay, it will become. Then we do that. Increasing and decreasing, and stock is there, and there is a decreases. There is two item, debtor and creditor. The only is there. We do that. Increasing in current asset, we do see that. Also see the sum. Creditor will be reduces. It will be less it, and the debtor will be increases. It will be less it, and stock only is that reduce it. It will be added. 30,000 is the stock, and 2,45,000 in debtor, and the creditor 34,000. The difference you just calculate it. Do the sum in that. Just note it down and do the sum. If you have no don't come this answer, never. You just calculate it. It will come the answer. Okay, 30,000. Then debtors 2 lakh. It will be less it 2,45,000. Then creditor also less 34,000. The total of this 30,000 minus 2 lakh 2,45,000, 34,000, we get a total of less than 2,49,000. Okay. In the sum, I will tell that I just forgot to do that. Okay. Okay. Cash flow from operating activity. Cash flow from operating activity is that 98,000 less that 2,49,000. It will become around just calculate it. Sorry, 98,000 minus 2,49,000. 1,51,000. Sorry, 98,500. 98,500 minus 2,49,000. 1,50,500 of cash flow from operating activity. 2,500. This is a negative value because 98,000 minus 2,49,000. Then less tax paid rupees 74,000. Okay, this also negative value. Negative minus negative should be positive. We add with that 1,50,000, 3,500 plus 74,000. It will be around 2,24,500 in negative value. Net cash flow from operating activity is that 2,24,500 in negative value. Okay, we highlighted it. I hope you all see that visible in the font size. Then investing activity. In the investing activity, there is a sale of fixed investment is there, sale of fixed asset is there. It will be, there is a 2 item. Add that 8,500, 12,000. Then outflow of cash is not there. In the sum, there is not given, so we not take it, just the format we take it. Total of that 8,500 and sorry, there is an outflow of cash, that is the purchase of investment. We do that in the before, not then this thing only we do the workings in the before. The purchase of investment is 18,500 is there. It will be appear in the investing activity. Negative value if the purchases is there, less with it 18,500. Difference of that 2,500. I hope it will be it is corrected. 2,500. Net cash flow from investing activity is 2,500. Okay. Then we come to the cash flow from financing activity. Inflow of cash is there is a one loan is there. I tell that before. In this year only we get the loan. The loan is come to the businesses. There is a increasing in cash, inflow of cash. We add that 2,70,000. Then outflow of cash is there. There is no outflow of cash is there. We not pay, nothing is there. 0000. Okay. We add it. $2,70,000. Nothing is there. 2,70,000 is the total. Then net cash flow from financing activities 2,70,000. Then we can conclude that add this three bolded items. 2,24,500 less a negative value. Add that 2,500. Then 2,70,000. The cash flow from net cash flow. Add the three items. It will becomes under. We have only add that. It will becomes under net cash flow of rupees 48,000. You do in the calculator also. 2,24,500 plus minus value is plus value 2,500. Then 2,70,000. It will be aroundly come that 48,000. Then add with the opening bank balance. Opening cash there means no opening bank balance. Opening bank balance what? 1,49,000. Here I give that. See now. 1,49,000 opening, closing 1,90,000. If the difference will be matched, we add it 1,49,000. Add the 1,49,000 with 1,48,000. Simply with that, there is 1,000 for 2,000 for 50,000. 50 plus 1 lakh. There is a 3,000 short on 50,000. 1,97,000. Okay, we conclude that the cash flow statement is correct. In the examination, how they mark will give for that. In the step mark is there is the 3-step mark. In the operating activity 2,24,000, it will becomes only the you give the step mark. They give the step mark. Then net cash flow from financing activity only you get the 2,500. You have the step mark, and net cash flow from financing activity 2,70,000 only you get the that mark and allocated mark. And net cash flow from activity, if these difference will be added, net cash flow will come and add this both only you get that last step mark. Okay, only these type of format give the step marks. In the last previous examination December 2021, they give 3 marks for each steps. Around that it will be covered 12 marks. Okay, 12 mark. 4 answers there. In the operating activity 3 mark, this investing activity 3 mark, and financing activity 3 mark, and net cash flow from opening, if you add that, the 3 will become the answer will become give the 3 mark. If you have any mistake in the first step operating activity 2,24,500 is not came, means if whole entire sum will be wrong, they give never mark for that. Okay, according that you do the cash flow statement in very carefully. Then now we completed the provision for taxation concept. We next move to the next concept. What is the next concept? Okay, read it some. In the previous sum, we do that provision for taxation. In the sum, we do that provision for machinery. Okay, like that same concept. And the fixed asset we do, that is for liability. It is for fixed asset. How we do same concept will become. Just come with me, follow with me, and do it. Same logic is applied here also. Simple, but it is easy. Okay, first of all, read the question once to twice. Okay, creditor they given opening balance 1/1/2005 is there, and 31st. These opening closing balances here started and ended opening closing balance they given. Okay, creditor they given, and loan from partner they given, loan from bank they given, capital is given. In the sum, you ask the question, where is the net profit? They not give the net profit. How I derive the net profit? The difference of capital. They not tell that share capital. They simply tell that capital. That time you take that difference of capital. It is the net profit of the business, because in the financial accounting, the balance sheet, you remember that balance sheet, share capital, add the net profit, that same logic will be applied here. That logic will only come that opening balance increases that capital of the closing balance, it will become the net profit. We do that, add the net profit with the capital, that difference is only the net profit. Simply we find out that. Okay, then cash, debtors, all are same stuffs. On machinery they give 80,000 in the opening and 86,000 in the closing. We do the workings. The provision, the depreciation for the provision they given 1/4/2000 was 27,000 and the closing was 36,000. We do the adjustment for that. 27,000 difference of provision is, in the adjustment they give the two difference of the provision dates. If the balance is they give separate adjustment, separate working for the provision for depreciation. Okay, in the adjustment they given means you take simply difference between the opening and closing. There is a difference between the provision of difference is 9,000 only. Okay, the provision for taxation, what we do, create the provision means we added with the opening balance. Here also same, but in the fixed asset there is a opening balance is debit side. The same provision means it will be credit side, because it is a liability. We take that amount for future purpose. Machinery account. This is working note 1. Like that, you just understand and that type it. Then to balance B by D 80,000 by balance C by D 86th. $86,000, then by provision, I tell that before, 36,000 minus 27,000 equal to 9,000. That difference will becomes in the credit side. This is debit side. Asset always debit balance 9,000. It is a credit. Then total it. Here what we find out, 86,000 plus 9,000 is 95,000. 95,000. Here 50,000 comes. What is the 50,000? What is the 50,000? Increasing in machinery, that means bank account. Why bank account? We purchase the machinery in either bank or cash. The most practical way, the bank only used to purchase the machinery. By check they given NIFT or DD they give to purchase the machinery. I wrote that simply purchases. Okay, 15,000 we find the difference of the machinery account. Why the difference will become? Because there is a provision 9,000 opening balance and closing balance. Add difference is not compare the opening. If question directly, some questions are directly given. 80,000 is there opening balance and 86,000 in closing balance, and the adjustment they given as the difference of 6,000 is not directly they given. The 6,000 of rupees purchase of machinery or provision for the year they given, like that they given. Sorry, 6,000 is a provision for the year, like that they given. Okay, but the difference is not matched with the adjustment. On that time you take that account working note, then only you find out whether it is a purchase or a sales or a depreciation. Like that you have find that why it will be appeared, then only you can understand. The provision is same as a provision for taxation, so no difficulty in this sum. Okay, we go with the directly sum, same as our before format. I will do it this sum. Okay, then this sum we do that. What is I tell that net profit is 1,000. Okay, we speedily we complete that sum because there is a no time. Time is so goes speedily. Fastly come with me. There is a no difficulty. I tell that format before that. There is a 3-step operating activity, financing activity, and investment activity. There is we follow the steps with the sum. Okay, net profit. I tell that 1,000 is there. 1,000. Then add the TDR, tax dividend and reserves. There is a provision for taxation is there. No, there is a no provision for taxation. No extra item is not there. So we give the blank that. Then net profit for extra item is not there. So we leave it at the box. Then we come to the non-cash expenses and losses. Yes, there is a depreciation. They give the 9,000 rupees. Then depreciation 9,000. Sorry, 9,000. Then non-cash income and in expenses, not income and gain is there. Non-cash income and gain, there is a no non-cash income. There is a 9,000 is there. Total of 9,000. Opening operating profit before working capital changes is 9,000. Opening, I take same step. Profit before working capital changes. rupees 10,000. Add with the net profit. Okay. Then add the increasing and decreasing result. It will be already I calculated. You just see that and difference, you work it out and do it here. Creditors. Then stock. Creditor how much? 5,000. Stock 3,000. Then debtor how much? 3,400. Okay. The difference of 8,000 minus 3,400 is 4,600. Add with the net profit. The operating profit before working capital changes. It will come 14,600. Then this is the net profit from the net cash flow from the operating activity. Then cash inflow from, if you do the adjustment, the every item is simple thing only. Investment activity, cash inflows. Cash inflow means sale of investment. Sale of investment. Sorry. In this sum there is a difference, so you know follow this one. There is no sale of investment. There is no sale of fixed asset. There is only purchase of fixed asset. Purchase of fixed asset. Purchase of land and building. Of commission land purchase of building. Okay, what is that? 15,000. It is negative value. Then 30, 15, 5, 10. 10,000. Land and the buildings 5,000. Okay, you just noted that question in the before, you answer it here. Then total of that 30,000 negative value. Cash flow from operating activities negative value 30,000. Then financing activity we come. The financing activity, there is inflow of loan from patent. loan from partner and loan from bank is there. There is a loan from bank we not consider in the cash flow statement. Sorry, we consider in the cash flow statement, but you see that the loan from partner, we get that loan from this year in the newly. There is a no opening balance. There is an clearly given as a 20,000 this year newly come. It is inflow of cash, but loan from bank is there. It will be appear in the cash flow statement. But the difference of opening and closing is closing will be reduced. It will be indicate that repayment, some loan repayment is there. Liability value decreases, means repayment that loan. Loan from partner 20,000. It will be inflow of cash and outflow of cash. Repayment bank loan is 5,000. The difference is 15,000. Net cash flow from financing activities 15,000. The whole difference is 15,000 minus 30,000, 14,600. The whole difference is I think so 14,000, 19,000, 29,600 minus 30,000 is 400 is the answer. Negative value, I think so. Yes, negative value. Then opening cash here they given as an cash 4,000 and 4,600. 4,000 is there. We come negative value of 4,000 minus 4,000. It will become, yes, it will become, our sum is correct. Okay, then we to move to the next sum. Here we completed the sum. We do the format. Maybe account. This is the question of the sum. You also note it down. Do it in your home notebook. Practice is most important. Okay, we go with the next new concept. This is the most important concept. Okay, this class we complete all the important concept in the basic understanding way. You just, this much of knowledge is more than enough to crack the cash flow statement. But if you have a practice after, if you understand the concept and where it transaction will be paid, will be applied in the cash flow statement, understand it and do it in your notebook. Sums will practice more sums in your books and my classes question also. Then only you have understand that if you simply see that book, the question, oh, simply this come this here, this come here. But in the one thing, if you close that book, you take that question in your one paper and write it the answer without seeing the solution in the book. You can't do that because practice is the most important for the examination. So practice it. Do it more practices. For MCQ also you must be practiced. Then only you have cracked the MCQ also. We provide the MCQ compiler for the intermediate level. I hope end of the 15th or 16th I launched that foundation, inter and final all 20 subject MCQ compiler available for the CMA students. I will hope that compiler will become as soon as possible. I think I launch it 20th of February. Sorry, for 20th, 15th of March, I think so. I hope that before or after, I think so. Currently, we have 7 compilers in that my store. You can purchase it. The link of that my store is given in the description box. You can check it down. Okay, we come to the main topic. This is the very important topic. What is the topic? Dividend. Dividend. Okay, we all understand dividend. Before we go to the dividend concept, we must understand that what is dividend. And one thing I tell that if you want some break in that video, you take that each and every concept I complete that. First I conduct provision for taxation. You take some break for provision for tax. You complete that starting video to provision for taxation and take break. Then provision for machinery, take the second sum I do. Start that sum after the break for then complete it. You take before the break from that. Then after the break, come to the dividend, and after the break, the next page I gonna you take some break from in between that time. You don't feel that too much of reading. Your mind is free only. You can able to solve that sum in very easily. Your mind is so stressed means you can't answer the sum because open-minded it. This video is recorded. This is available every time in the YouTube channel. The video is not deleted. I hope, and it will be in their YouTube channel for you. You must be utilize it. Take a break and see the video. Don't see the video in continuously. It will be stressful for yourself because this is teaching in online is so difficult to learning in online. Just take some break and mind free your mind in between of your time. I hope you understand it. Okay, come to the very important topic, dividend. Dividend is an important topic in the cash flow statement. It will be the major role. Before that dividend, I tell some concepts in the dividend. Okay, in the sole trading concern. Okay, in the sole trading concern, they do that purchase, they do sales, and they get some expenses and they get some incomes like that they given. In the direct expenses we get gross profit, and indirect expenses we get net profit. In the whole net profit, it goes hopefully goes to the sole trader concern. Okay, in the sole trader concern, whole net profit goes to the sole trader concern. In the same concept will be applied into firms. The net profit shared to the each partner of the business as a salary and reserves and profit shared to the every partner in the different ways, only in the net profit. Okay, in the company, in the company, there is 1,000 shareholders. Okay, the owner of the company is, there is no single person is the owner of the company. In the company, there is 1,000 shareholder is the owner of the company. The net profit of the company is shared to 1000 shareholders. For example, net profit is 1 lakh shared to the 1000 shareholders. Okay, we do the some simple calculation. 1 lakh divided by 1000 shareholders equal to rupees 100 dividend paid to each shareholders. Okay, this is the simple concept. In the sole trading concern, there is a net profit wholly enjoyed by the sole trader concern. The partnership firm wholly net profit shared to the partnership partners. In the company, they pay the net profit as a dividend. Yes, the company whole net profit not paid to the dividend. There is a retained earning also state. What is the retained earnings? You must be understand that okay. Retained earning company, it is a net profit the company pay to the company. Net profit pay to the company is an retained earning. Retained earnings. Okay. Retained earnings. Company pay the net profit to the shareholders is known as dividend. In the cash flow statement, the dividend is divided into two parts. You must understand very clearly where the dividend, how the dividend is going, the concept where it will be started, the everything, each and everything you must be know. Okay, net profit paid to the shareholder is known as, it will be known as dividend. Okay, the dividend divided into two parts. One is interim dividend. Another one is proposed dividend. Okay, one is interim dividend, another one is proposed dividend. The both interim and proposed dividend, the concept will be seen in the sums. In the company, provide the financial statement. They provide the financial statement. Every company prepare the financial statement. Okay. Every company prepare the financial statement. In the financial statement, they have, for example, profit of 2020 rupees 1 lakh. Okay. The company takes that profit means it's assumed that it is a net profit, retained earning. Company takes, if pay to the shareholder is dividend, shareholders. Okay. The simple way I tell that, in the company they conduct the AGM. What is proposed dividend and interim dividend? Interim dividend is a dividend. We pay the dividend in between of the year. It will be paid that in that year only. In the proposed dividend, the proposal was during the year and the payment was next year. Okay, this is the difference between interim dividend and proposed dividend. Simply I say that I take some notes for you for your benefit. I give the notes for you, that you note it down in your notebooks. A company conducts the AGM, annual company conduct every year annual general meeting is there. In the annual general meeting, passed resolution rupees 70 as a dividend they given. It will be paid to only the equity shareholders. Accept, then it will be accepted from that general meeting. It accept, this proposal will be accepted, the resolution will be accepted. They will be pay the dividend in the next year. Dividend next year. Okay, this is a simple concept. Example. This is the example for proposal dividend only. Proposal dividend, if the resolution will be taken in the annual general meeting, the annual general meeting approve that dividend is be okay. The equity shareholder they give the dividend. That dividend proposal made in the year, and if the example proposal is be made in the 2020, they declared, the word declare, you must be understand that declare means they declare that this year dividend will be paid, and the proposal will be accepted means declared, but this year declare that payment will be pay off on 2021 only. The payment will be made in 2021, declared in 2020 only. Okay, interim dividend means this is for example for proposed dividend. Interim dividend means this dividend is called sorry, dividend means, for example, example, 1 minute, I will scroll down to that. For example, February tax 1 minute. Yes, in the financial year April to March. Okay, in the financial year April to March, interim dividend example I telling that interim dividend financial year April to March is the in financial year. Okay, in that February month in between or that for example February month I take the dividend of rupees 20,000 will be paid to the shareholder, each shareholder paid to the each shareholder. Every shareholder 20,000 will be paid. Due to the emergency situation, the company gets more profit in that time. That company declare at that time emergency situation. The company declare the dividend in the February month and pay it in same year is known as interim dividend. For example, if a company paid 2020 February month, they declare that dividend for the year declare that 2020 declare that 20,000 in the year 2020 it will be declared that okay, simply I tell that it will be confusing for you. Interim dividend, you understand that interim dividend pay off the same year. In the question, in the cash flow statement, they give the three things only you can be understand it. Only you must be understand, you want to understand three things. The question they give declaration, declare and payoff. Okay. In the year dividend, they give a declaration and payoff in the both are given in the question for the year 2021 and 2022. Okay, 2021 they proposed you take that not concentrate in the spelling, just to ignore it, and declared interim dividend 2021. Yeah, that also you take that. Proposed in the 2021 is not take that. 2022 you not ignore it, not take that. You take that declared interim dividend in 2022. You take these three things: the proposal of previous year and declared in the previous year interim dividend, and payoff in the payoffs or declared dividend will be payoff in the next year, that will be taken as a take only these three things. Okay, what is I telling that you just in payoff 2021. This 2021 declared that that a dividend is be proposed in 2021. You take that the proposed will be pay off in 2022 only. That only we take that. Then interim dividend pay in the same year. That also we take that. These three things only we take in the sum in the cash flow statement. Just understand this concept. You go to the sum, you can have the clarity of the sum. Okay, I think so. For example, I give that again on some example I give that you have deep understanding the sum. If sum is be asked in the examination, you can answer it accordingly. If the question will be in the same like this only, cash flow statement in the question that in the debit side, sorry, 2020 and 2021. Okay, proposed dividend. In the liability side, they given as a proposed dividend. Okay, rupees 20,000 for the year and 30,000 for the year. Then this is the liability side, they given as a like that. They given in the adjustment, they given rupees 10,000. Okay, declare interim dividend rupees 10,000. In the sum solution, what we do, in first thing you take that 2021, you take both the declared and the payoff. Declared rupees, if the previous year declared 2020 will be payoff in 2021 rupees 20,000. I hope, sorry. Declared, what is declared in the 2021? Rupees 30,000. It will becomes in the 30,000. Add 10,000 for interim dividend also declared. Both total 40,000. Then payoff rupees 20,000. Payoff means previous year declaration proposed was paid in the current year 2021 payoff. Add with that 10,000. Here also add that interim dividend 10,000. Then only your sum is corrected. In the interim dividend concept is that the interim dividend paid in the current year. Paid in the current year means declared, add with the declared, and adjustment they given means add with the declaration and add with the payoff. Both we add, then only the answer is correct. Add with the declared 40,000, payoff add with that 30,000. Okay, this we do work it out and it will be posted in the accordingly. We see do the sum. You have crystal clear of the concept. If you have some idea about the dividend, proposed dividend, what is proposed dividend, what is interim dividend, how it will be added in declared and paid off, you have some knowledge in that. This is the 10,000. This is the 10,000. 10,000. Here also 10,000. Interim dividend 10,000 will be added to declared in 2021. 30,000 plus 10,000, 40,000 paid off. Previous year 2020 paid to the 2021 year. A pay of 20,000 plus interim 10,000, 30,000. This both will become in the accordingly places. We do the sum. I will tell that. Go to the sum. It will be crystal clear for you. In this sum, I do that. How we do that? How it will be appeared in the cash flow statement. Okay. In the sum, they give the adjustments. In the adjustment will become, we do that working notes before that solution cash flow statement format. Okay. In the sum, what they asking, equity share capital, there is a difference between equity share capital. That means increasing in equity share capital means issue of shares there, inflow of cash, then redemption of preference shares there. There is a redemption is reduces. That means repayment is there something. We see in the sum. Then what is the important proposed dividend? Here the proposed dividend is given in the sum. In the proposed dividend, I give the explanation solution. First thing the proposed dividend is proposed dividend they given na proposed dividend they given opening rupees. I write in small ways, short ways. Opening rupees 30,000, then closing will be 48,000. Sorry, opening closing not. 2018 proposed was 30,000. 2019 proposed was 48,000. Okay. Interim dividend was rupees 20,000. Okay, like that they given in the sum 30 48,000, and like that in the sum we do that. What they given? They given proposed dividend 2018 that will be pay off in next year. Then we write in two things: declared during the year equal to declared and the payoff during the year. Both we write that. Declared what? Declared 48,000 in 2019. That only we write it 48,000 plus 20,000. Add that because there is an adjustment of interim dividend equal to 68,000. 30,000. Sorry for the background noise. 30,000 plus 20,000. 50,000. Okay. Like that. We add this. This both will be appear in Okay, we continue with the class. In the class, we declare that proposed dividend opening balance is 30,000. Okay, in the continuation of the video is that we see that solution proposed dividend and interim dividend in the example sum we do complete it. In the proposed dividend, opening balance is 30,000 and 48,000 is the closing balance, and the interim dividend was 20,000, and the declared during the year was 48,000 plus 20,000 is 68,000, and payoff during the year is 30,000. 50,000 appear in financing activity. Okay, declared in appear in operating activity. We add it. And payoff will be the okay. We do in the sum. Okay, come to the sum. The working note 1, what will do? There is given the depreciation of the plant and land and building. They given. Okay, first we do the depreciation of the plant and land and building. Adjustment. Working note 1. Working note 1. Plant account. Plant balance by and 2 lakh in 2 balance. Rupees depreciation was rupees 10,000. The difference is 1,30,000 and Okay, it's of plant. Working note 2. Working note 2. Account. Is also opening balances debit side to the by depreciation 20,000. 20,000. I'm just 1 lakh is given. See, fixed asset 2 lakh. Or provision is always credit balance. Debit balance. Here it comes. 50,000. The adjustment they given. What they given? Income tax paid 35,000 during the year. Then that means they are asking what is the provision for the year. Paid total is 45,000 by provision. Both will be applied activity. Okay. What are the adjustment we see in the question? There is a plant and land and building. We do the opening balance of a plant and building was the sum 80,000, 2 lakh. We do it, and depreciation 10,000. The balance is purchase of land and building. Opening balance and closing balance given the sum land building 2 lakh and 1,70,000. We put in that, and depreciation was 20,000 adjustment they given, and there is a balance of provision they asking, and the liability side they give that a provision for provision they asking. In the provision they asking the provision for 40,000, 50,000, tax paid 35,000. No, for balance we find out the provision for taxation. Speedily we do that sums. You know that. Complete the sum. Cash flow statement. You must understand it. If you have any doubts, cash flows in the entire financial management, that we complete with this sum. First, operating activity net profit. They are asking what is the net profit. Okay, what is the net profit? I do it the sum already, so then only I complete the sum as much as possible. Save your time. 18,000. Then DRTD. The 18,000 is difference between the opening profit and closing profit. You see the sum for 5 minutes. If you note it down, take a screenshot. After that, do the sums and accordingly. The solution, first we do the proposed dividend and do the 3 working notes 1, 2, and 3, and come to the sum. Cash flow statement as per the financial as per the AS3 TDR. First step, declared the dividend they given. Declared dividend rupees 70,000. Reserves they given. Reserves rupees 30,000. There is an increasing in reserves. Provision for taxation 45,000. The total of this net profit before extraordinary item rupees 1,45,000. Then add depreciation, plant 20,000, 10,000, land and building 20,000, goodwill rupees 25,000. Be given the sum. Less in cash income. There is no cash income from the activities. Total of 55,000. This total is 1,50,000, 45,000, 2 lakh. Okay. Operating profit before working capital changes is 2,18,000. Then working capital changes, increasing, decreasing in the current asset and current liability, add and less it. Creditor, it will be like the current liability increases, rupees 28,000 less liability value increases, sorry, decreases, it will be negative. Bills payable as 4,000. Okay, 32,000. Then debtors 40,000. Bills receivable 10,000. Total of it, difference between 86. Sorry. Operating profit is negative value of 86,000. $86,000. 2,18,000 minus 86,000 is rupees 1 lakh. 60,000. Sorry. At 28,000. 2,46,000 less 186. 86,000 is 1 lakh. 1,48,000. Sorry, 1,60,000. Okay. Then net profit from operating activity less the net profit from the operating activity. It will be due in this column also. Okay. $86. Okay. $1,60,000 less tax paid 35,000. 35,000 tax paid during the year. We less it with the operating profit. Okay. And then we derive that net profit from operating activity rupees 1,25,000. Okay. This is the net profit from the operating activity. Then investing activity, inflow of cash, sale of land is there. Sale of land is rupees 10,000. Then outflow of cash is purchase of land rupees 1,36,000. 1,30,000. We do in the working notes itself. Less it 1 lakh less 1,20,000 is the operating investing activity. $1,20,000 is the investing activity. Okay, then financing activity we do. There is inflow of cash. I said before that share capital is increases. That means issue of shares there, inflow of cash. Financing activity is there, 1 lakh rupees. Then outflow of cash, repayment of preference shares, rupees 50,000. It is being less at 50,000. Then pay off the dividend, financing activity, we less it 62,000 paid off during the year. 62,000. It also less it 1 lakh minus 1,12,000 minus 12,000 is there. Okay, minus 12,000. Is the financing activity. Okay, I think so. We complete the sum. Then add this minus 12,000 minus 1,20,000 and 1,25,000. We divide, add these three things. We get the net cash flow from activity is rupees minus 7,000. Then add with the opening balance of 25,000. We get closing balance of rupees 18,000. See the book answer. See the opening. We add this both cash in hand. This is the twist they ask in the examination. If they give cash in hand and cash at bank, both they given means you add that both 10,000 plus opening balance of bank 10,000 and 15,000 of cash in hand equal to 25,000. Then 8,000 of $30,000 equal to 38,000. Come like that. It will be shows like that. 25,000 minus 18,000. Sorry, in this sum there is a mistake. It is not a 30,000. It is an 10,000. Change it. Sorry. There is a type mistake. In this sum, there is a question is 10,000 only. We do the sum is correct. Okay. The opening balance of 20,000 less it will be derived as a 18,000 closing balance. The sum is correct. Answer is correct. So don't worry that question I type mistake wrongly the 30,000. This is the correct answer. The sum is correct. Okay. We conclude that cash flow statement. We completed. I said that Sunday we complete the cash flow statement. There is another concept is there, accumulated depreciation. This is a simple concept. I explained a few minutes. Accumulated depreciation is it is a depreciation in the financial in the balance sheet. In the balance sheet, less asset management. We do that sale of asset and adjust with the profits. Remember that what is the purchase cost of that asset? We less the depreciation. We forgot the third year. If you have continuously do the purchase, the depreciation every year in the final account and financial statement. The asset, what is the purchase value of the asset in the balance sheet? In that include that accumulated depreciation concept is coming here. Accumulated depreciation means in the balance sheet, always depreciation we post in the accumulated depreciation will be added with the each and every year. We put the total 30,000 is the accumulated depreciation to or okay. This is the format of the balance sheet, and there is no much question asked in the accumulated depreciation. In the recent class, I will do the each and every concept. I will do in that sum only one sum. In this concept, I complete that each and every my concept in the cash flow statement. The accumulated depreciation only. The small concept is that there is no logic. Nothing is there. If the depreciation is less with the assets, in the years they follow the same step. In the new modern financial management, they do that new concept like accumulated depreciation in the liability side they put it, and in the time of sale only they take with that asset and find out the exact profit or loss of the sale. In that time only we take that accumulated depreciation. It will be used. Okay, thank you for watching. This is Raja Rukma. If you have any doubt, can contact me at Telegram at CMA Raja Rukma. Thank you.